All right.
Okay, so we're just gonna try and get through as much Q&A as possible today. Monday we had a really great session, but we spent a little bit of time. Mark did sort of longer form answers to really questions on sort of the philosophy of speculation and those type of things. If you didn't tune in, I really highly suggest it. I thought it was a really good session. But for today, I just want to try and get through as many of your guys' questions as possible. First question was on MOD. This is from John. He's saying that he bought it on the 6th at 53.68, stopped out today at 51.25, 4.5% loss. He's asking to assess the buy. So you bought it yesterday. So it looks like you bought it. Looks like coming through this high here and took a really tight stop. Yeah, I would not grade that as a very good buy. Because if you're going to buy this name through this handle is potentially buyable here. Just doing a quick measurement, 52.70. Yeah, 6.5% or so. I would have just bought it on this day. If you're going to be this tight though, and if I was going to trade yesterday, using this tiny little pause day, the prior day, I might just buy it and use a stop at the low of the day. Being really, really tight. If it doesn't just go, I'm out. Otherwise, I want to give it, the full length, the stock, the full amount of room, at least to see the pivot sort of fail. The stock hasn't done anything wrong here. So I feel like you bought it late and stopped it out, really quick. Now, if you're going to buy something late, I would take it. I prefer a tight stop than a wider one. But no, I would give, this not the best looking buy. Eric's saying, I meant to have asked this weeks ago. I think it was explained once. So for earnings due out, when it says poor guidance, does that mean the 7.5% calculation is less likely to be correct, while good guidance means it's more likely? Yeah, I mean, that it just means that in terms of the amount of predictive power, if you will, or how liquid the options market is, for an individual name, guys. Here's the biggest thing with earnings, though. Those are just estimates, right? We're just trying to gauge what is the option market saying is likely, but that option market is using the rear view mirror, guys, to price that in. So you still, if you're sitting there going, well, the option market says it's only, projecting a 5% move. I mean, we had a 30% move in NVIDIA over the summer, I think, when the market was projecting 5 or 6. You can still have massively outsized moves. So use that as a tool. But don't rely on it in terms of position sizing. And as you're always going to hear us say, I would never carry a large position into an announcement without the bigger the position, the bigger the cushion I want. George is asking about CRNX. Do you think the stop should be adjusted for the stock to go to the stop is about 14%? Should it be break even? Follow-up question. What's the max position size for each stock? Well, the max position size, it depends, George, based upon how aggressive you are, how big of a trader in terms of liquidity constraints and those types of things. You said 25% for each. Well, if you want a 4-stock portfolio and to be fully invested, then yes, that would be the max size. But we have people that trade larger than that and smaller. And remember, there's lots of different. This is not a model portfolio, guys. I know we keep saying that, stressing that, but the reality is you want to learn how to trade and how to trade properly, and then figure out in terms of what's a big size for you. Now, in regards to CRNX, you could move this stop to even. Now, I'm not saying you're right in terms of it's 14% away now, but the stock isn't. It doesn't mean we're going to let the stock move all the way to the stop before potentially adjusting it. It's acting well. I don't think there's moving it to break even at this point might be a little bit premature. But if you're a shorter term trader, I think that's. Remember too that the stops, posted stops, don't mean you have to sell there. Sometimes I'll sell portions of my position in 2, 3, 4 different spots. Those are sort of max stops, but we have lots of folks that are taking, smaller stops or doing staggered blended stops. But right now I would just, if you're in this trade and you bought it properly, a pullback back to the breakout would still potentially be normal. So just keep that in mind. John is asking to grade a buy on INFA. Let's see. He says I bought on 11/28 at 24.90. Okay, I think you're buying right here. Might have to position. Okay, just separate trade. Sorry, he's asking. This is short, but short trades can work. And if I was going to buy something like this, I would have been really tight and just right as it comes through this little pivot here, you try and get on board the name. And I probably would have used a stop either maybe the day's low or somewhere right in here, because you haven't had a lot of time. And in a trade like this, I would be selling at now I'm at a multiple of my risk into a move like yesterday. I'd have been taking profits. I always think too, in terms of, the shorter that pivot, I'm looking generally for a shorter move. And then CME. He says he bought half on 11/28 at 218, then added to make a full position on 11/30. 11/28. So you were buying right here, then added on 11/30 as it sort of followed through. I mean, this was one. The biggest criticism I have of the name is, just it looks a little laggardish, 85 relative strength. But as far as the right side and the daily and how you're handling it, I don't think that was a bad plan. I would have absolutely reduced by now once you've gotten these violations starting to pile up. Now, you're trading below the 50. I would have, if I wasn't stopped out of some yesterday, I would have been trimming some, because it's just, now you get you've got what Mark likes to call the megaphone effect, where the volatility is, widening on this right-hand side, exact opposite of what we want to see.
Look at that RS line as well. It's kind of in a nosedive right now. So you definitely want to be careful here.
And even this RS line, this has been sort of losing steam as the market was sort of coming on here. This black line, this is your S&P, was sort of going the wrong way. So that might have been a little bit of a tell, but normally 89.90 tends to be, our cutoff in terms of RS. So whenever you're sort of going down the list, you're either looking at, what could potentially be a laggard. The only exception would be like a newer issue, but this isn't one of those. Kelly's asking about CRS, bought on November 27th, added to it December 1st, reduced some yesterday and got stopped on the rest today. Could you please rate the initial buy? 27th. Yeah, this is a perfect buy. And this was a trade, again, when we had you had this pullback buy, which looks like you said you added to. Got stopped out. Added to it December 1, right here. Yeah, I think you did it perfect. And the reality is, remember the the ends, the trade isn't a bad trade just because you got stopped out. You started the position right here, added to it here as it was improving. Yeah, I would have handled it exactly how you did. Or where, let's say you're able to increase the position and you move your stop, maybe like you did to this low, the low of 11.29. That this is progressive exposure done properly in one name, where you're able to add size without adding, say, additional risk. Say you bought here on this first buy, had a stop maybe down in here. Now, as you bump the position, this first buy is close to break even. So you're able to increase your overall size without increasing your total risk. That's exactly how you want to do it. Yeah, unfortunately, it didn't work out. But this is a textbook example. And I would do it this way 100 times out of 100.
Well, I think too, they're asking about was the mistake given the average daily volume on the 2-day pullback was a little high. And I'll just say, Kelly, look at how the volume, yeah, it was above average, but it just kind of came back to the breakout after having a really nice day on the first. And then volume, on the pullback was okay. But then the next 2 days, it was back well above average. That's exactly what we want to see.
Yeah, this was good tennis ball action here. Why it failed in real time, guys, we're never going to know. And the reality, to Brandon's point too, everything was looking great. And now the violations starting to pile up. But remember, even in a good environment, you're still going to get hit on names occasionally. But no, I think your analysis is good, and you did things properly. If you do things right, eventually you're going to find yourself, really compounding on successes and good decisions. If you do things bad, you're only an accident waiting to happen, even in a good period. No need for apologizing, Kelly, on misspelling Brandon's name. Let's see, bought BSY yesterday in the breakout, sold the entire position at about 3:30 as the stock squatted on high volume. Looking at the action today, was that the right move? Or that was the right move, but is that how you guys would handle a squat like that? Listen, if you're a shorter term trader, yesterday's squat was not great. I wouldn't call this an enormous squat, but you're right. It was not what you wanted to see. Now, in a situation like this, where you said you sold it on the low, 51.62, if you're using, another 30-40 cents lower, and you're willing to just hold it, and you get the 50 right there, I might give it a little bit of room. It would just depend how things are acting. But sometimes on a big squat like that, normally in a situation, if I had a big position, I'd absolutely cut some of it. If I didn't, and it was smaller, I'd probably just give it the stop. So again, but no, I don't think that was a bad plan. Again, though, remember, you're gonna do this at times, and then the stock's gonna turn around and move without you. So you have to always ask yourself, what I saving, is it paying for itself? And this is where, again, if it was a really high RS situation, I would not do that. Say like a power play, I try not to choke those off at all, because saving 1-2% just doesn't pay for it when the stock can turn around and go up 10, 15, 20% in just a few days.
Well, I'll just add too, George, as long as you kind of had that in your head ahead of time, and you don't want to just be making those decisions on the fly, if you will, especially if you're new, because a lot of the times, to Marky's point, you'll get jerked around. So if it was part of the plan, then you stuck to the plan, no harm, no foul, right?
Arun, I don't know exactly what you're asking about the home builders. Saying, giving your thoughts on DHI and Lennar buy as the stocks run up, and a short base from where we've made the buy coming out of the short base pivot. I mean, look, the home builders, and this was, there were more than just, these names. You had Toll and Pulte and a number of other names. Yeah, they ran up the right side, but they just pulled back really orderly. You see how, when you get this is a little compressed. It's a compressed right side. But
look at the volume too.
Yeah,
the volume is really low on that pullback.
Volume came down really nicely on this pullback, and as soon as volume came back into the name, pow, right out. And so here's where, especially when you get sometimes we'll trade a group move like this, where when they're all sort of moving in lockstep. You've seen Mark do this, with the credit card companies in the past, and some of the other, groups that sort of move in lockstep. Well, you just buy maybe a half position in one or two, and figure you got a, full position, exposure in the group if you want to handle it that way. But they look good. And if they'd set up a little more, we probably would have added to them. But yeah, so far so good. If you're a really short-term trader, I think you could be, using this on a percentage basis, or only up, say 5-6% on these names. If you took a really tight stop, you could potentially even look to de-risk the trade already. Suad's asking about BVIO. Bought at 30.30 on 12/1.
Looks like a good buy.
Yeah, well, listen, is outside day. We talked about this, how this is sort of one of these situations, you had the power play that didn't really, give you a setup, and now it's just morphed into this bigger base. And we talked about this sort of lower cheat down here. It got a little volatile in terms of an outside day, but if you're willing to be, aggressive, 30.30, so that must be right through this little pivot here. And then, I would use the low of this day at little wide. He's saying half the stop was 28.30, the other half was 29.5 for a total risk of 4%. So So you kind of used a staggered stop, I guess, within the range of this day for a percentage that you're happy with, when probably rightly so, because you measured this and said, okay, this is a little too wide for me. Got out of half yesterday at 2R and now holding the rest at a break even stop. Listen, I think this is a creative way of saying, and this is exactly how, look, if you want to buy a name and you go, well, the technical stop is too wide, what other option do you have? You have to come up with a percentage stop you're comfortable with, or you just have to be patient and wait. Well, you chose a percentage stop, and I like how you're using, saying, look, I want to have a 4% risk on this trade. So you're, trying to stay relatively tight. That's the only way you can handle it. And it took, de-risked half at 2R. Yeah, I mean, these are using good tactics. Omer's asking about ARM. Is it building a viable pivot? Yeah, this is one we've been watching. And one we've sort of batted around a little bit in terms of how when to potentially look to add this name, because it looks, the IPO market is starting to show maybe some newer ideas. I like the most recent quarter here. This just needs to tighten up a little bit. Could you try it through 64 and put your stop down here? Yeah, this is still mid single digits, pushing it a little bit, but
So
yeah,
it's about 7%.
yeah, 7%. So I do think if this could tighten up a little bit more, maybe we even get a tightening within this handle, and then I think it'll look more optimal. Guri's asking, would you consider a pullback buy in YPF? The short answer, on Tuesday the 5th, right here. No, I don't normally buy this. Couple of things. You're sort of just, you got to have rules, and like we talk about in terms of pullback buys. This just looks like a stock. It's not quite strong enough to be a power play. You got 70% run here. That's just short-term extended. Now you're asking, can you buy it as it turned, like the first day that it turns up? Well, yeah, you can. And I do like, at least that this is, it's sort of pulling back to this old top of this old base. So be aggressive. The thing I don't like though here is you didn't get a good close. And it doesn't look like you got any volume support either, where take a situation like this is a pullback buy I'm potentially interested in. MMYT, as you come out one day, come back, see how if today closes, say right here, and volume is, average or the stock is showing it found support here, then I would either, if I owned the name, I'd potentially add through today's high tomorrow, assuming we open quieter inside, and stair step up my exposure that way, because the stock is showing that it's found some support. This YPF, it's just sort of this is just a guess that it's gonna, after this day, there's no evidence of support, prior to it just sort of snapping back on the 5th.
Well, I think too, just like, Mark, you said it was like about an 80% rally. It needs time to work, to digest that. So to have a short pullback of what, 1, 2, 3, 4, 5, 6 days, it's a little aggressive.
Joe's saying every time I gradually build up profits and I get a little more aggressive, I get stopped out of bigger positions, can't seem to get ahead, even when progressively exposing myself. How do you deal with this? Is it just bad luck? Well, some of it can be just bad luck, Joe, and I've experienced that myself, maybe not for quite as long, but think about it this way. If you feel like you're doing it right, can you do the right thing for too long? Just because you didn't get rewarded, and my guess is that you've probably been, been more a victim of the market than bad tactics. But I can't comment in terms of how you've done the progressive exposure each time. But if you just decide I want to take more risk by just adding more risk without any kind of reinforcement, either from the market you're own trading or that your timing is in sync, at some point you're going to get yourself in big trouble. So let's say you're right. You progressively exposed a number of times over the last several periods and you're flat. Well, would you have been better to just take more risk right off the hop? I would argue that's you'd probably be in a bigger hole or a bigger drawdown. Where if progressive exposure, there's a number of times where you sort of you jockey up for position and then you wind up leaning on gains, giving some of them back. And yeah, maybe you wind up scratching small losses, plus or minus a little bit. But if the market is allowing you to take, much more exposure than you otherwise would be able to with your initial risk, you're doing it correctly. So I would go back, do a little post-trade analysis and then really see. But it only takes getting it right one or two times to see the real value and to take a much bigger step ahead.
Well, I think too, Joe, and we're still early in this cycle we just kind of started. So, sometimes you do stumble out of the blocks a couple times before you really get any traction. So yeah, I would just say, if you're feeling discouraged, don't be, because sometimes, again, it's not like we're ripping roaring here. We're still, on an orange, which, market Minervini explained on Monday. Marky and I have seen some more success recently than we have in quite some time. So that's why we were like, okay, well, we think based on our own trading, it should be green. Well, to Mark's point, that maybe we're just in the better names right now, which could be. And yeah, BSY. I mean, listen, MMYT was one that acted really well. We missed that. We wanted to get on board that one. Well, we might get the chance again. So, some stuff, we are getting stopped on some stuff on the platform as well, so yeah, again, we've kind of stumbled out of the blocks here a little bit. We got to see, if the market's done digesting, where we go from here.
Another sort of related question: when you experience a larger drawdown, can you talk about your planning or mindset change to help you come out of the hole? And larger drawdown is always relative, but when everyone uses that type of language, it usually means, larger to them, or in terms of maybe even emotionally destabilizing, where you feel like, wow, I've got a hole I got to dig myself out of. Well, the first thing you want to do is ask yourself, first rule of being in a hole, put the shovel down, right? Stop digging, and do some post-trade analysis and figure out how you got in the hole. The bigger drawdowns for us have always come after really good periods where we're trading large and either didn't, get off the gas quick enough. So the bigger, drawdowns were always sort of following winning periods. When you're in a period where you just feel like you can't get any traction, this is where you have to just think of it as, and I made this point many times over the last year, so some of you guys might sound like a broken record, but you have to be trading at size that almost sounds meaningless. And your initial gains in trades then have to be more about restoring confidence and your confidence in timing to know that, hey, things are working. But the goal is not to just make it right back with those first set of trades, but to give you, that first cue that, hey, I'm seeing the ball, I can make contact again. And now I can start trading a little bit larger. So yeah, I can't stress enough though, that the only way to responsibly come out of a drawdown is to trade smaller until you're, again, we use a lot of different, analogies or even phrases, stocks, tactics, feedback, but until you're getting feedback that your timing is in sync, you can't trade larger. What I will say though is, in a very short period of time, in a good market where your timing is in sync, you can make a lot of money. So I don't tend to worry about, being in a sideways type period or a period where I haven't had much success. I just have to tell myself, stay small until you're seeing what you want to see, because I know I can make money very quickly when things start really working. Ben is asking about CW. Bought on December 1, looking at the chart on MPA, I believe it has had a few warnings for lower lows and outside day. However, it's still within the stop. How do you mentally deal with stocks like this? December 1st. So we highlighted this name, or this name was originally put on right here. It was just coming out of this space, just sort of a textbook breakout. And then I think it was put on pullback by, sort of triggered right here. And then Mark took it back down, and it was sort of bought back coming through this pivot. So doing a little trading around in this position. And I think you're speaking in terms of, I'm trying to see where the 4 lower lows. 2, 3. Yeah, I don't see.
Yeah, it's more 3 or 4 days down. It's not.
Yeah, I don't
it's
see
not
4
the
lower lows, and so far this has sort of been catching what looks like catching support after 3 lower lows. The simple answer is mentally dealing with the stock like this. Keep in mind too, even as this is happening, this is staying pretty tight in here. So it isn't like volatility is just wildly blowing out on the right-hand side of this chart. You say you find yourself getting impatient. This is where, I would say don't get over caught just over analyzing. Stocks are going to fluctuate, and give it the benefit of the doubt. So stick with your original. This is where if you're someone who is a second guesser, meaning you get in the trade and then all of a sudden, it pulls back for a day or goes sideways and you're getting impatient. Go with your initial plan and learn, how to stick with a plan. If you're someone who's tempted to constantly second guess yourself once you're in a trade, even write down what your initial plan was and stick with it. I just think you're going to be much better off, especially if you're newer, rather than constantly, jockeying yourself around or choking off trades.
Well, and Ben too, notice how this action looks normal. And we talk about normal versus abnormal price action, right? We want to get knocked out of abnormal price action, not normal. And, to Marky's point, this is still very tight. I think it's 3% to the stop. So yeah, you just kind of got to sit with it and be patient.
Yeah, and it would be getting more abnormal. You see how once you come into new highs here, on a pretty nice day with nice volume, for us to take out, even this level now, stock comes down and doesn't find support today, maybe tomorrow and does one of these. Well, this is where now you'll have that volatility,
right?
That's widening to the right-hand side. And that's the type of action that you want to knock you out.
And then you move on.
And then you take your money and you move on. Andy's asking, can Mark Ritchie talk us through his Yelp trade? Sure. Yeah, so this was a situation. I was originally looking at it right over in here. And this was that day when the market, I think the entire market just sort of gapped. I was hoping this was going to stay kind of tight in here and give me a low cheat where I could just buy it. And here's the way I was looking at this. If you look over at the weekly, this came up on a fundamental screen, I think, as well. Lots of nice, weekly bars of accumulation. And then if you looked over in the daily, you had the undercut here. So this looked like that shakeout pattern where, we sort of talk about that, again, Hardaway crossover, slingshot move, where just keeps ripping back. And then it paused, had a decent close. And I was thinking, okay, if I can grab this low right here should be good. Or if I can get even tighter in there and, maybe the stock's going to take off, we put more of a right-hand side in. I think we bought a little bit on this day. I don't know, Brandon, you can double check.
Yeah, I'm trying to look at it.
Well, we jockeyed around in this one as well. And then I think added as it followed through the next day.
Yeah, so we bought some on the 14th, bumped it on the 22nd.
Okay, so we did buy. Oh, that's right. I think we had an alarm in here. We bought a little bit on this gap because we probably measured. Let's see though. Yeah, even the entire range on this day is less than 5%. So took a little bit of a line here, and then I think added on this day. When it didn't follow through, you got this big reversal. We reduced some on this day, and then moved the stop and closed the rest. I want to say here on 11/28. But here's the other thing. We're sort of getting traction other places. So we tightened this up saying, listen, in order to take using progressive exposure, if I want to take, a few other trades and I don't have enough open gains to lean on, this was one we decided to sort of choke off. And it leaked off. Now it just needs to reset. I wouldn't, put it on a secondary watch list. I'd like to see this come back up and really clearly this is your spot. And this is, when I sent this to Mark, he said, I don't like it. Too many reversals over here. Well, he was right. I'd like to see this now set up, into this area, and maybe, maybe you get a pivot up here or something like that. And then maybe I'd try the name again it clearly, it needs to clear this level for me to probably be interested in again. Let's see, was 827 a valid buy point for NU yesterday, or should you wait for a breakout above 834, 836? It's an $8 stock. The market cap's 39 billion. It's very liquid, tight spread. Okay. Yeah, I think we talked about this, haven't we? We talked about this last time. I was saying I really don't like this break here, and this almost looks ledgier to me. I mean, it's not a ledge in the traditional sense as we talk about it. I would not have traded this yesterday, and I wouldn't trade it even through here. I just think there's better ideas. You're right. It's a $39 billion market cap. It's a bank. And yeah, I see it's got good earnings, but historically, our record's not even very good in financials. And I don't really like the pivot. And this break to me looks like it's sitting over the stock. Could you try it through this with a tight stop? Yeah, you could, but not something I'm going to try.
Well, I think too, like after that earnings, it broke out, and then earnings came out and it gapped down, and it closed at a decent close, but the next day it went outside, and listen, if it was going to be strong, it should be back into higher ground already.
Yeah.
So why isn't it?
And
that's what I would ask myself if I was looking at this.
That's a good point. And to Brandon's point too, you've got, low volume out here prior, and then high volume in. There are two sort of two big negative days that look like it's just, like I said, sort of sitting on top of the stock right now. He's asking about CBAY as well. When it was added to focus on list, it was 6% above 23 and already high handle. I think he was talking. I'm not sure about which day you're referring to. Probably over here. Well, just because a name is added to focus doesn't mean it's necessarily viable. We're focusing on it either because it's strong, or we think it's close, or maybe imminently viable, and it's one we think you should be focused on. So yeah, we're looking to see, can this tighten up, in this range and form sort of a high handle. You had to be pretty aggressive on this one to get on board. This was another one I think we talked about over in here. We had it. It's just been, this has sort of been that, bucking bronco that gets you to the other side of the corral, but can you find a way to get and stay on it? If you bought this breakout, if you didn't take it really quick, it came in, then pretty hard. And we were looking at it right over in this area here, hoping it was going to tighten up. And then, you sort of had this, shake out and then a rip the other way. So again, just been hard to find a good low risk entry. Mark's asking about TJX. Curious the reasoning for continuing to have a small position, even though it hasn't performed well in the month since it was bought, especially when there have been better ideas since. Wouldn't it be better just to cut the loss? Well, first of all, the better ideas since, that's only in hindsight. We don't know that in real time. And this stock is, look, could you cut the position, move on, and then just add it back if it resets up? Sure. I do that all the time. That's absolutely something that you can consider doing. It looks like it's just trying to build, another part of the base. This was one, though, when we were originally putting it on, had held up really, really well relative to the general market. Obviously, they're operating their business pretty well. So, but it hasn't failed. It's just sitting in a base here. If you want to cut and move on to something else, you can do that. Again, like I said, if you're newer, I generally wouldn't be just choking trades off just to choke them off. Robbie is saying, trying to understand the 1.5 to 2.5% risk per trade with respect to portfolio risk. For instance, 25% position size, 2% risk of total equity. Are we trying to maintain this ratio or better for the total portfolio risk as we size up to 30, 40, 50% higher? following the question here, Brandon, I think the simple 1.5 to 2.5% risk per trade is just, that's in respect to saying, don't let any one trade, be that large in terms of, percentage risk to your overall portfolio.
Yeah, I keep reading the question. He's saying otherwise, he's saying progressive exposure only makes sense. Otherwise, 25% positions with no gains would result in overall 8% loss in the portfolio. That's correct. We don't want to get 100% invested with, thinking we're going to take the stops on all of them and be risking 8%. That'd be too much. So he said, however, keeping the risk to reward around 2-to-1 and making gains on the first 25% position before adding another 25%, the total risk of equity for each trade is maintained, and the portfolio risk appears to decrease due to the profits of the first 25%. Yeah, I think you're understanding it right. I mean, we don't listen. When you're taking larger positions, you want to make sure you're not risking. You have to be comfortable with the risk you're taking to the total portfolio. Total equity at risk. So if that means you're going to get 25% invested and want to risk 2%, well, you're not going to get more invested until you're showing a gain on whatever. If it's one position, if it's two positions, if it's 4 smaller positions, we don't want to add risk, or you have to be comfortable adding risk because you've got some gains either, booked or in open equity. So yeah, that's I think the way you asked this question, I think you're understanding it. So I hope what we just talked about helps as well. But yeah, let us know if follow-up question if we didn't.
Shark is, I guess he's making more of a comment, saying, positive feedback after discussion last week about waiting for support before buying a pullback. I felt like the concept clicked for me. Well, that's good to hear, Shark. And listen, guys, that's sort of the key to a lot of these Q&As. Every now and again, something clicks, or you see an example and you sort of have some of these like aha moments, or seeing things a little bit differently. And that's what really, that's the value, I think in these sessions. Hazim is saying, Mark Ritchie has an average loss of 2.5%. How are you able to accomplish this? Are you more aggressive when seeing minor violations? Can you give examples of previous trades where you're selling and reducing? Well, sure. We just looked at Yelp. Or sometimes we're jockeying around a position, sort of a few times. And it was funny because last, I gave the example, somebody was, being a little bit critical of NVIDIA, and I couldn't have been more opposite on something like NVIDIA, where I can put on a huge position with a really tight stop on this day and get right out if it doesn't. Oh, sorry, it was just draw it above. This day here, got in, stopped out the next day, something like a 2% loss. Well, I'm looking for tight little areas is the short answer. And sometimes when things don't go, and it's the bigger you're trading, the more precise I want to be with the timing. As far as selling, reducing, it's the same tactics. We're kind of talking about. We talked about this name. This silly little name. Yeah, size a little bit smaller. I think we were buying here originally. Got stopped out on this outside day. It didn't just go. We stepped right aside, then bought it back on this day, added to it on this day. I think we might have did we add back to it?
Yeah,
here, and then I think we reduced some here, sold some here, and have a tiny bit left. Always trading around, not always trading around, but when a position allows you to sort of trade around and add reduce, that's something that we do.
Well, I'll just add too, with the idea that we do have a pretty tight average loss, but we don't have a problem being wrong, and we're obviously wrong quite a bit. Our win rates lower than Mark's and lower than the platform, and we're okay with that. We don't have a problem, just taking the loss and moving on. Especially like this is a good example. We kind of knew what to expect just based on our past experience when that stock should have gained support, and we were comfortable trading it the way we did.
Yeah, here's another situation, we talked about, and I had mentioned this both in the Q&A and said, we were buying this name right when it was put on either potential breakout or breakout alert here. And I said I would either be really tight or be, wide, meaning go tight. If it doesn't just go, you step right aside, or allow it to, put in more of a right-hand side. Well, it started to work. We de-risked into earnings just to demonstrate I don't have any crystal ball here, guys, because obviously in hindsight, I wish I could tell you I held the entire position or an overweight in earnings. That's crazy. That was our biggest position at the time. And then just sold into this run. Well, now, and for those of you who are saying, can you show us real world how to use progressive exposure? Took an initial risk of this to make that. Now I've got all this that we can start leaning on. Now I can open up the game a little bit more as breakouts start to proliferate, or if they continue to work. Well, I take an NVIDIA, and now I'm just showing you, just took this a little bit larger. Didn't work, got right out. Same thing with the Palantir. I thought these names, might really turn here on a dime and move. Bought this on the pullback buy and got right out on this day. Same thing every time. There's not, so what do? Most recent trades, where you're being really tight on not working, you step back off the gas a little bit and say, okay, we need to is the entire market pulling back? How are the rest of our stocks handling? Still have some other things that are working. So like Brandon was saying, it's a little bit mixed, but you've got to be gauging the feedback. Well, how's the most recent feedback going? Well, hasn't been as positive. Well, I can't have the accelerator pedal to the floor then. So hope that provides a little bit of color there. George is asking about MLP. It feels like I'm going a little bit faster, guys. I just wanted to make sure we got to, more questions. I see there's just more and more piling up, so we're going to get to as many as we can. We're trying to plow through as many of these as possible. Did not buy on 12.4 or 12.6, but I was wondering how to judge squats like these. Provided I did not buy on 12.4, would it have been okay to buy the second breakout above the 15.20 level on 12.6? Let's see, 15.20 on 12.6. Well, if you're going to get a squat like this is where I'd like to see some type of reversal recovery. So I would not just buy back through the original pivot, say, on this next day. That buy doesn't make any sense to me. I'd like to see this pivot build out, because clearly you've got a reversal. You got a reversal here. Obviously you came off in this big correction here. There's some supply that is, sitting in this area. So I'd like to see this tighten up into this reversal. Maybe you come up here and put in a couple of tight days and then go. I might try it like that. And as far as overall setup, keep in mind too, the stock is quite spready and thin. It's lower priced. It's in the real estate group. This, is not, I like the VCP characteristics though. We've got a nice 1, 2, and now maybe we get a third here. That's sort of like what I drew in. Already talked about BSY. I'm just trying to get through some of these, as many of these shorter questions. How do you rate the LII setup? Is this a buy right above 423.17? No, it's not. It's not a buy. It's a strong name that it just doesn't have much of a right-hand side. And this is where now, the stock is wedging a little bit here. Now if you were going to buy it, say, I just wouldn't recommend buying it. You're buying it extended. Now, is it still pretty tight down to, say this low here? Yeah, it is. But this is where I just like to see, do we get more of a cap? If I was going to try and buy this, I would have been buying it right here on this day. And here's the pullback. You come back to the prior base. catch some support right here on this day, and you got a good close and good volume. And I would have been buying right through this high the next day. Stock gaps above your buy point and opens only for a few cents above it. Would you buy it or hold off since it did not move through your buy point properly? Good question. And this is where I would look. Sometimes I'll give it a minute or two as well. Maybe you got to pivot at 100 and it opens at 125. If the bid is there and I want to own the name and it's less than 1% above the pivot, that's a buyable gap in my opinion. When I say I don't chase gaps, I'm talking about gaps where stock gaps, 4, 5, 10% above a pivot, maybe on news or something like that. I'm just going to leave it alone. So, and the rule of thumb we normally use is 1 to 2% above the pivot. And even on a gap, it's rare that I will buy one, but I showed you an example of, and this was sloppy and it didn't work. I bought a little bit of stock on this day on this gap. Again, smaller position, expecting it to build out more. I wound up, sort of jockeying around as I explained and getting, stopped out for a small loss. But as a general rule, yeah, chasing gaps for me, it's just not paid. That's why I don't do it. And think of it, the more you stretch your buy, the more you're buying late, you're just decreasing the probabilities. So that's why the bigger the gap, the less likely I'm to buy. I'll just wait. And you can't, the old, you can't dance with all the girls. That it's just true in the stock market too. You can't catch them all, and you don't need to. That's the other thing. In a good environment, there'll be far more ideas than you have capital to buy. I was even saying doing my own screening and do not rely on the focus list. Many of my purchases are the same ones. Okay, that's good. My own focus list is also similar to platforms. However, not all stocks I buy are on focus. Some stocks that I recently bought and have worked out include IMGN. Good for you on IMGN. That was one. That was one we were really close to putting on as well, and it did kind of come to this little pivot. So if you caught that a buyout gap, that's great. ARM and CMPR, yeah, and these are two that were close. We talked about ARM. This one. We talked about last week as well, saying, and this was on focus last week, right, Brandon? Yeah, we put this on breakout alert.
Yep.
I want to say.
Yep.
Yeah, this is sort of classic. To be honest, I get concerned when Mark Ritchie, who's better trader, does not like some stocks I suggest. But here's the other thing. Just because I may not love the setup or take it doesn't necessarily mean it's not tradable. So when I say I don't like something, or I wouldn't trade it, if it's low risk and the stock is in a stage 2 and meets all the criteria and you're using a tight stop, then I don't necessarily, I want to be clear. I'm not saying you can't trade that way. When I really don't like something, it's when it's, just doesn't meet any of the criteria. It doesn't even meet the basic minimum criteria, or the stock is really low RS or that type of thing. But listen, remember how, Mark talked about the other day, like with the Bob Ross analogy, these are your trades. And there have been plenty of trades, even, Mark has sent me that, like, I wouldn't trade myself, and he's made a fortune. And there've been trades, that go the other way. So there's a lot of artistic, freedom, or sort of lanes within the highway, but there are strong guardrails. So to be clear, if the stock is, is buyable, then that doesn't mean, just because Mark Ritchie or Brandon Hedgepath wouldn't buy it, that you shouldn't. There could be a lot of reasons too why we're not, maybe we have enough exposure on, maybe we're not getting traction and you are. This is why, again, to learn how to get that feedback from your own trading is really more important than how invested are we right now? Or what's your current exposure? What does that matter with what your current exposure should be? So, because there will be times where, man, we're really getting traction and others aren't. And even within bull cycles, there'll be periods where it just feels like, you can do no wrong. In times you go like, man, I just feel like I can't seem to really get the traction the way I want to. Well, that's just part of trading, and you're gonna put yourself in a really good period if you stick with it and use really good tactics. Yeah, somebody else making a similar comment saying, that they zig and zag. We discussed that already. Tom saying, what's the earliest you guys would trade an earnings gap? If you're referring to, like, would we just buy a gap, a large earnings gap? There isn't an earliest. We just don't do that. I mean, you can switch over to, and if you want to try and trade on the 5 minute, and I do know some people who do that. They, maybe there's a name they want to own. It's gapping, and they look, can I see a VCP that I can get on board on, on the intraday, and then maybe then use that to finance a hold on the daily. I think you can do that. That's not something we do regularly, but as generally, if it gaps big on the earnings, I'm waiting for some other type of base or pivot to develop. So it's going to be days or weeks. Let's see. George is asking about Amazon. Is it viable above 148.57, 149.26? Potentially. And this is sort of the $64 million question with the mega caps. Are we going to get more right side development, or are these sort of just slight, I don't even call this pullbacks, really just consolidation pauses, and then just going to continue? If you want to get on board these names, this might be your shot, where, you had a little reversal close here and here, but it's not the most well-formed right side. So just keep that in mind. Alicia's saying, when you are testing the market and put on a position, do you wait until you book profits to put on another position? Or do you wait for a particular percentage to add more positions? Brown, I don't know, Brandon, why don't you give your 2 cents on this, since I've been doing a majority of the talking here.
So when you're testing the position, do you wait until you book profits? No, I mean, we'll add. Listen, we come into the day and say, okay, well, what do we want to put at risk if we're just coming into the market, right? If it's 1% of equity, that's, it's like, okay, well, if we're going to risk 1% of equity, how many positions do we want to play? How many positions are in viable positions or are viable today? And then we, back in it that way. And then we ask, if those are working. So say we buy, we're coming out of, cash, and we buy one position, and there's 3 we're watching, and the first one acts well, and we've already determined, like, hey, we're going to take up to 1% of equity risk, then we'll add up to that risk unit. Okay. And then we ask ourselves, all right, well, we're going to sit and wait to see how those act. Maybe we get stopped out of, half of them. Okay. We then calculate, well, what are we up in our gains? What do we want to see from those names before we start adding more risk, and what's available to buy? So it's kind of like we're constantly, discussing, looking at each, stock we own and the names on focus lists and how they're reacting. What's the market doing? So it's a moving scale, if you will. That's how I look at it.
Yeah, absolutely. Jamada is saying, thank you for everything you guys are doing. New into the room, having trouble staying in positions. Have a difficult time dealing with overnight drawdowns or setbacks. Normally don't carry positions overnight for that reason, and come in fresh the next morning and scalp all day. I scale down my share size, the move goes in my favor, and I get frustrated that I didn't have more shares. When I scale up my share size and the move works against me, I get upset because I scaled up the wrong time. Is this something that works itself out with practice, or do you have any recommendations that could help me with this obstacle? Well, it sounds, just from what you were saying, is that you're probably more geared to being a shorter term trader. If you don't want to take overnight risk at all, then you're definitely in that short to very short term. Well, I would just be using the same principles, but either trading the breakouts for a 1-day move, or that if you don't want to hold overnight, you can't be a swing position type trader. So you kind of have to define yourself here and figure out, what do I really want to be? You can't be everything, guys. And how many people had asked, even Brandon and I over the last, year. Why aren't you guys doing the short-term trading when other people are making, that's where all the money's being made? And the answer I kept giving is because that isn't who I am. That's not who we are. Well, that's fine. That means I have to be okay with other people having a great year when I'm not, and waiting for my turn. There will be a turn for everybody, but it won't be everybody's turn at the same time. And that's the key, is figuring out what you're comfortable with. Now, in regards to, getting too emotional, or it sounded like you were saying having trouble staying in positions. If you're breaking rules and those types of things, or not giving stocks room, it sounds like that has more to do with the fact that you just don't want to hold anything, or
take losses, if
or,
you will,
or take, yeah.
limited.
So yeah, to get a little more granular would help in terms of what do you mean by that? But it sounds like you're more geared toward being a shorter term trader. Then I would just, pick, your risk points and treat these trades just like a day trade. And you can use these same tactics. I mean, I know plenty of people who do. They trade on the lower time frames, waiting for the VCPs either after the breakouts, or they use the daily. Just like Mark was saying, I'm still doing the same, even when he was doing the shorter term trading that he's talked about many, many times. The analysis is the same. He's looking at the daily, and just trading for that really, really quick move. So yeah,
I think really to highlight like what Mark's point on the risk. So Amada, I would just say choose a risk point or amount that you're comfortable with that is not going to make you do these emotional things. Start there and then see what happens.
Toby's asking about DBX. That's one I have on another watch list, saying about buying last Friday. Should have been, was that? That would have been, 12-1 here.
Yeah.
Yeah, it was short. And this is sort of what I would have expected. You don't really have a right side here. The stock is now trying to put in a right side, of what would be this, a bigger base. So you play right sides that are really short. This is often what you get.
And see how it's not done anything wrong. And it's
Exactly.
on a list that we're watching it, because if it can, tighten up here a little bit and form, I don't know, the right side just doesn't have the look yet. It's getting there though.
All right, we'll go for another. I think we've gotten through a good slug of questions. I see there's a lot more.
We're
So
halfway through, yeah.
halfway through. Okay, I'm gonna try to get through a couple more. So we'll go for another 10 minutes or so. Diego saying, I have two questions. Volume expanding while forming the VCP on the right side, would that be an indication of a faulty pattern? Okay, good. You got BSY as an example. When we were looking at the name originally, the volume was not expanding. You had this volume doing this, but yes, you're right. And here we really didn't see. Yeah, I mean, I see what you're saying. Yeah, these are it's a slight negative, but the price action was still pretty tight.
I think that close on that one day was higher, was it not? Yeah, and 12.5, that close wasn't that bad as the volume was increasing. It was above 50%.
Yeah, this looked supportive. Like the stock was catching support. You had a relatively decent close. But yeah, as a general rule, yeah, we like to see you want to see that volume contracting on the right hand side. Clearly, this stock was still, had a lot of supply to contend with here. 2, I work full time. I have to be selective in the trades I place. Am I missing opportunities by focusing only on setups with uptrending RS lines while forming the base, such as booking? Am I making an exception using what Mark explained as lead and rest in a YouTube video? As far as lead and rest, I'll leave that one to Mark. But I would just be focused on the right hand side. As a general rule, you want uptrending. You certainly want uptrending RS lines, say over the last months. But if you're just looking at the last few days, I wouldn't be that granular. I would be focused more on the pivot than the RS line.
And actually the RS rating too.
Exactly. Torsten's asking about FTAI. The primary basis from September to end of October, the stock is forming something like a small base. Is the stock still buyable? As it's already extended 10% from the primary base. I just want to look at the weekly when you're talking about a primary base.
No, I'm not really seeing that.
I'm not seeing that as a primary base, but I think what you mean is like this initial base over here. Yeah, right now this just looks like a stock, you know, it's a little too short for me. If you want to try and play sort of this continuation move, again, I would have been looking to play it maybe again, you found support right here as it turned back up. Or you just wait for, you know, a whole nother base to form. Right now, we're sort of in that in between, you know, 2 to 3 week bases are not long enough unless there's some type of a power play, and this doesn't meet that criteria. So you just wait. Yeah, Tim's is making a comment, or I think you're making a comment saying, yeah, he's having a frustrating year reviewing his trades, went back prior year when he had an 88% return, reviewed those. He's cutting his losses good, which is what I can control. That's good. Taking profits at say 2 to 1. My average loss was 6%, but my problem is low batting average. Well, the low batting average is usually a result of the environment, and yeah, we experiencing that this year as well. I don't know if that was a specific question or just making more of a comment there, Tim.
Well, and I think too, he's saying that low average gain. Yeah, that was also a problem this year as well. We just weren't getting, you know, the 10% gains were few and far between. So I think your observation is right. It's been the market.
Let's see. David's talking about EME. I bought on 11/21 right here. Okay, yep. And added on the 27th. Was definitely, it wasn't a bad ad, and this is where I would have reduced the ad most likely, you know, after this day, or probably gotten stopped on a portion, and say your original stop is here. I think it was a fine buy and a fine ad, because you know you sort of waited. This was another one where we were looking at it. It gapped, came back. You got, you know, pretty good supportive action. Traded the pullback buy on 11/21, coming through the highs of 11/17. You know, this ad might have been a little aggressive, but if things are working, yeah, I like it. And but when it doesn't go like this is where, you know, you either reduce or get out of a piece. Now it just looks like it needs to retighten up. If you're still in the name, I would hang with the original stop. But no, I think your tactics are good, and I would give the, you know, looking at that trade, I think it was a good trade. Let's see. Nat is saying, Mark, when you're trading around a position like you did with CCJ, do you consider how far extended above the 50-day moving average of stock is when you sell some? It seemed like you were selling when the stock was 20% above the 50. If not, yeah, I do. And this is actually one of the things too that I really like about, you know, some of the new things in Monalert, where Monalert, you know, will track that for you. So rather than doing some of these manual calculations where you got to figure out how far a stock is extended from, you know, a certain average, Monalert will alert you of that. And yeah, as stocks, you know, in some ways, yeah, they have a little bit of their own, you know, personality in terms of how extended they can get, where, you know, a more mature stock doesn't get nearly as extended as, you know, maybe a higher alpha situation. So looking at the price history there can be helpful, and just saying, you know, what's likely or probable. And if you're trading around a position, that's when you want to be lightening up. All right, let's do one or two more here. Napon's asking, can you review pay and PRO? Yeah, pay was one. This was buyable right here. We had this on focus, and
yeah, I actually covered this in the stock analysis over the weekend too, so I'm not sure if you saw that.
But yeah, not a whole lot to cover other than, you know, it's pulling back to the breakout now. You had nice volume on the breakout. Here's where I would expect this name to either find some support as it pulls back to this breakout level. Maybe you get a pullback buy. If you get a pullback buy, I think it's you know, potentially buyable. I'm just measuring here to say how big is this percentage pullback. Yeah, I mean, we're getting, you know, 10%. This is where I'd want to see it find some support. PRO. Yeah, this is just sort of, similar in terms of, nice breakout, pulling back orderly, not, and, if this pulled back and, another day or two, we've got 1, 2, working on our third lower low, today or tomorrow is where I would expect to see some type of supportive action. If you got to pull back by, again, sitting back on top of, maybe you get something like this, stock pulls back one more day and then gives you a good close. That's where, it's my drawing tool's not working here. Something like that, and then you look to buy it, or you could potentially add to a position through a setup like that. A number of questions on BSY. We've already talked about that. Phil is saying or asking, how do you learn patience? Have children, Phil. That's only partially a joke for any of you who are parents out there. I get impatient with trades like B, K, and G. So how did you learn patience with your trading?
I think it's time.
Time and experience.
Exactly.
There's nothing that can replace those. But look, I would love it too, Phil. If everything I ever bought just blasted off and went to the moon the minute I bought it. But that's just not how markets work. Now, in a situation like this, there's no reason to get impatient here. Well, initially, I think the stock was tried here with a really tight stop. I can't remember if it was this day, and it just got right out. Well, if you're a little bit more patient, you don't give it the tight stop. You give it a little bit wider stop and give it some room. And this is where, again, with your personality and your own expression, some people are going to trade in and out more. Others are going to say, I'll just sit with the name and let it prove itself. Well, this stock hadn't done anything wrong, and we talked about this. So if it resets it back up, I mean, this entire pivot here is, 3207 down to this entire range is, 3%, 3.5%. And now it's, trying to follow back through. So the other thing again is, what was your plan? If you're getting impatient, but your plan said to do X, you do X, and leave emotions out of it. And that's where, Mark's famous comment from all those years ago in Market Wizards, like, you'll never trade perfectly, but you can perfectly trade your plan. So, and the best way to protect yourself from yourself is to put that plan down and say, I am going to follow this and get an A+ on following the plan I put down beforehand, and then execute. So Yogesh is saying, is it a good buy today? Looks like a VCP, and he's giving a bunch of different names. AMD, Snow, Tesla, Shop. Well, none of those names are on focus. So, and we're getting close to time. So I was looking at AMD myself, hoping just, that we're going to get some type of a pivot here. Well, it's just shooting, blasting right back off. But there's not enough of a right side here. Could you have tried to really grab this right off the lows? Yeah, but that's just, again, there are plenty of times where stocks go higher, where I'm not on board. But the question is, was there a way to get on board where you can turn that edge over and use those tactics repeatedly? Anybody can just buy a random stock and watch it go higher. That's called luck. We're trying to, use good low risk tactics that, when playing probabilities, putting them in our favor, so we continue to turn this edge over, months and years, even decades, out. So, all right, let's do one more here. Technical question from Daryl. What charting software? Oh, we won't end on this one. Do you guys use MarketSwift, Thinkorswim, TC2000? Struggling on position size, RBLF calculators help depending on average return. Okay, he's asking a number of different things. So as far as the charting, we don't endorse anyone, charting software. We use MarketSmith. I don't know much about Thinkorswim or TC2000, but I know we have clients that use both, and a number of clients, that using other things. So MarketSmith is, for screening at least, has been what I've always used. And then, we also use TradeStation for sort of intraday charting as well.
He says he's struggling with on position sizes, so we could talk about that.
Yeah, I don't know what the struggle is in terms of, he says he uses the RBAF calculator. I think that's a great place to start.
Yeah, I would say like, listen, if you're struggling with like 25% sounds too big, then just, again, go to what are you comfortable risking and then back into it that way. So, where does that fall then with the RBAF calculator? If you're not comfortable with 25%, then is it 12.5? So if you're just getting started, is it Daryl? That's, start small. That's what I would suggest right now.
Rand's asking about, email that one to Bob. Rand, that's something that we've batted around, but not likely to do, but, and we'll do, one more here in terms of, I've seen a lot of these symbols already, so it's just, take a look at WWD. That's one we can look at. 1 on the 5th after the alert, stock seems to be drifting on low volume. Yeah, it is. And there's a number of names that are sort of drifting back right now. And this is what we're going to see, like, where does the rubber meet the road? And do we find support? It's the same every time, guys. Once you get into the trade, then you assess things, one day at a time, or, if you're playing cards, as the cards come out of the deck, one card at a time, and just making good decisions from there. So I think, yeah, how was the stop chosen? We'll end on meta here because somebody's asking about how was the stop chosen for meta trade. I could not spot a tight right side to choose a stop. Exactly right. It was used on a percentage basis, like we talked about earlier. Are there times where you want to be on a strong, maybe a strong name or a strong group, and you don't have a perfect technical stop? That's where you sort of have to choose a percentage stop. And this is the type of situation where, you sort of just do a little, calculating to say what would be normal in terms of a pullback, and is that acceptable? Now I'm not 100% sure. Mark said, well, hey, a pullback and undercut of the 50 would be kind of normal when we're buying the name, but it would be. So using that, and sure enough, that's what we got. Now, and now if this stock can't hold here, that's to Brandon's point from earlier, that's the abnormal action that says we definitely want to be holding, or it's going to need a lot more time, and you just move on. So, all right, guys, hope this was helpful. Try to get through as many questions as possible. I know we didn't get through all of them, but we did get through a decent slug of them. Save any we didn't for Monday, and yeah, monitor the platform for updates. I think this is a really interesting time because I could easily see another wave of potential ideas, proliferating or starting to work. But we're going to have to, gauge that one day at a time, one trade at a time. So monitor the platform for updates and watch for the weekend video, and we'll see you guys back in the trading room on Monday.
And I'll talk to you guys on Thursday.